once again, welcome everyone to today's masterclass. I'm really thrilled to have you here. And you all know that we host these sessions to, get educated or get ourselves trained for our next step in our life, which is our real estate journey. So before we dive in today's session, which is pretty amazing to see the turnout, a lot of people are interested. There's a couple housekeeping items. First of all, this session is going to be recorded and we'll be sharing the recording afterwards. So keep an eye out for that. And also, if you have any questions, please use the Q&A. And as we go along, you can ask your questions in the Q&A and we'll try to address all your questions live. If we miss anything, please send me an email at vinky@loombainvest.com and I will make sure we'll get you the answer. And I have a small little disclaimer. So this session is strictly for educational purposes and should not be considered as a legal or accounting advice. And if you have any questions that's related to investments or any financial advice you need, please reach out to the appropriate parties like your CPAs, your attorneys, or your financial advisors. So let's talk about why we are here today, right? This is the most important topic today. We have all heard before that wealth and freedom are two sides of the same coin, but it's not enough to have money. And if you do not have the right choices, the flexibility, the freedom of time, I would say, and the ability to travel, which I love to do, all my life that I just wanted to travel. So all this freedom comes once you are, I think, mentally and financially free. So today we're going to be learning about another asset class, which is going to bring us a lot more freedom. Actually, I would say closer to the freedom. And it's a single tenant, detail and standalone buildings that Cherif has already aced it. And he's going to be sharing his experience with us today. I'm really happy that he's here with us. He will reveal how to acquire high-performing single-tenant retail and standalone properties without your own capital. You will discover how to find profitable opportunities, structure deals for maximum returns, and leverage creating financing to grow your portfolio without the traditional barriers of large upfront cash. So without further ado, our topic is investing in single-tenant retail and standalone buildings without, or I was going to say without any money, but with no money down. And that's our topic for today. So Cherif, welcome. We are super excited to have you. So I understand you have a huge presentation for us.
Yes.
So stage is all yours. You have the sharing session, whatever way you like to do it, we are here.
Thank you. So I'm going to do it actually with a flip chart because then people can follow easier. So again, my name is Cherif Medawar. Vinky, thank you so much for having me. So I want to get right into it. I want you to imagine you're driving on a street that has a two-way traffic. And you see a standalone building, I'd like an old Starbucks that's vacant, like an old Jack in the Box that's vacant, etc. So that usually is a standalone. There's a parking, there is maybe a drive-through that comes around, and it's for sale. But it's sitting vacant, so there is no tenant. I tell you how this has changed my life. This particular strategy made me millions of dollars, and I'll show you how you can do it starting with very little money to actually no money. So you would call the broker and you'd say, hi, I'm very interested in this property. Let's say they tell you the property is 700,000. And then you say, well, this is vacant, so my best offer is 600,000. They want to sell the property that's sitting vacant, so they send you a contract, and now you have the property for 600,000 under contract. Usually a commercial real estate contract is about 60 days for you to do a due diligence. Due diligence meaning you're going to inspect the property. But let's say they just give you 45 days for the due diligence. So for 45 days, you have the property under contract, and then we usually ask for another 15 days to close. So now we have it under contract for the due diligence, means for inspecting it and all this. Instead of inspecting it, you start calling national tenants like those tenants that you see in a food court in a mall that usually they're food tenants that keep growing because even in COVID, they kept growing. And what happens is you call them and then one of them, let's say Subway, says to you, yes, we're very interested in this. We would like to lease. How much do you want? And what you negotiate with them, you say, well, we would like 8,333 a month. The reason I use that number because it's easy, because 8,333 a month times 12 is 100,000 a year. Now these tenants, they sell several millions a year. Some of them sell 2 million a year, sandwiches and ice cream. It depends on the company. So you tell them, I want 100,000 rent per year. That rent is usually triple net. That means the tenant pays the lease. These big companies pay the lease and they pay the lease. After that, they pay the property taxes, the property insurance, the property maintenance. They handle that. You get, as an owner of a building, you get the property tax. I send it to them, they pay it. The property insurance, they pay it. But they lease the space and they usually want to lease for like 10 to 15 years. They pay escalation, so that means 3% increase every year. And they give us, the most important thing is they give us a corporate guarantee. Like many of these large companies are publicly traded. That means they guarantee that the lease will be paid based on their publicly traded company and based on their position in the market and what they do. Extremely powerful, very, very beneficial for us. Because once they get, you're smiling and dialing. You're calling the tenants when you put it under contract. You actually like make a little video, send some pictures, because you can literally Google some of these companies like Subway. You get their corporate phone number. You call their leasing department. You leave them the voicemail message. Then you find their email on social media. It's very easy to find now with even with AI and things like that, unless you have a list. And then you send them the info, you send them the pictures, and you say, I left you a voicemail message. If interested, call me back or email me back. All you need is one of them to call you back. And so let's say Subway called you back and they asked you how much and you told them 8333, it's 100,000 a year. And let's say they agreed to that. They are actually going to sign what's called an LOI, the letter of intent. That means they'll send you by email, Subway Corporation intends to lease that space for 10 years. We want to come in, we want maybe 1 month free rent or 2 months free rent. We want we agree to pay 3% only increase every year on the rent. So it will be 100 year one, 103 year two, and then it increases. And we will give you a corporate guarantee. Now, with a deal like this, what happens to the value of the property? There is a formula. Whatever the lease is, in this case, it's $100,000 lease. The value of the property jumps 16 times that value. So the value of the property would be 1,667,000, but let's say 1,600,000. Why? Because on $1.6 million, if you sell it to somebody and say, look, here is a tenant with a corporate guarantee, is going to pay you for 10 years, every year with increases, that property will sell at $1.6 million because the person with $1,600,000 will buy it and will be expecting about 6% return. What's 6% of $1.6 million? It's 97,000 something. So about 100,000 a year. So you have taken a property under contract vacant at 600. You contacted tenants and called them and found one tenant interested, and that tenant, you quote them the price and it goes up 16 times. Even if you quoted them, say, 80,000 a year. I'm just going to do some math with you. 80,000 a year, which is, by the way, divided by 12 months, like 6,600 a month. So the 80,000 a year times 16, the property would be worth $1,280,000, like almost $1.3 million. So whatever you get the property under contract, when it's sitting vacant, you're able to put it under contract at a better price than it would be when it performs and it has a tenant that's paying rent. The key thing here to understand is if in 45 days that you've been smiling and dialing tenants and leaving messages and sending emails to their companies, if nobody called you back, you have no obligation to buy. You just walk away from the deal. You have no downside, huge upside. And the idea is to call from day one. You go, take some picture. You have the right with the due diligence to access the property. That is a legal right. That means when you call the broker and say, now that we have it under contract, I want to go in and take some pictures. I want to send it to my partner or I want to send it to somebody. They will, by law, have to give you access. make a little video, you load it up on YouTube and you send it. Very, very powerful, few steps without any obligation to buy. And when you find the deal packaged with a tenant, the way actually people do it, they either sell the property or assign the deal to somebody else. Now, why do I share this with you? Because I've been training people for 25 years. You can see me on YouTube. I have 1,000 video success stories. And what happened is I've trained people to do this, and people tell me, okay, but I only have like $5,000 cash advance on my credit card, or I only have this. How are they going to take me seriously? So here's what I've done. I train people. Like I take people and I show you, let's say you want to train with me. And usually we charge $10,000 for this. And maybe it's too much for you, but listen to me to the end. We have a special with Vinky. But listen first to the idea and the steps of the business model. So you see a building, you can see that today. You can actually tonight driving around or tomorrow morning driving around, you're going to see some standalone vacant buildings. I teach people how to find the ideal building. And I'll give you some concept here. You want a building on a busy traffic. The broker will have the number of traffic of cars that drive per day. You want something, 25,000 cars a day or more. You want it with a drive-through, it's very desirable. You want good neighboring tenant. You want that Starbucks down the street. You want a good gas station across the street. You want Jack in the Box, Jamba Juice. So you want good neighboring tenants because it makes a big difference for whoever's coming in here. They kind of feed off each other. I have 15 criteria for the ideal building. So number one, I teach people how to find the right property. Number two, I teach people how to talk to the broker. What script to use. Hi, my name is Cherif Medawar. I'm very interested in 123 El Camino Real. What's the size? Oh, it's approximately 2,000 square feet. This is great. And now I give you proof of funds. Proof of funds because in commercial real estate, they only take you seriously if you have proof of funds. And I have a real estate fund. I have the money sitting in the bank, so we give you proof of fund for $1 million, $1.5 million, depends on the deal. That means you literally say, I have the cash sitting in the bank account. I'm working with this real estate fund. I am the representative of them. We would like to put this property under contract. So when you send the offer at 600, which I train you how to talk to the broker to do it, and you send the proof of funds, that means we're going to pay cash for this and close in 45 to 60 days. They sign, they let you put the property under contract. So now you have the property under contract. I give you a tenant list, 4,500 national tenants in the United States, the Subway, the Jack in the Box, the Chick-fil-A, the Burger King, the McDonald's. I can give you, we're talking thousands. And these give a corporate guarantee. They constantly expand. Their business model is based on expanding. That's how they grow. So then, when you have all these tenants, it tells you who to contact, the phone number, what size space they want to be in, what neighboring tenants they prefer to have. So when you start smiling and dialing, you have also a script. You even prepare an email. You send it to me. I am the one doing the training, not one of my team members or whatever. This is a symbiotic relationship. You will benefit, I will benefit. So I train you so you can get me the deal, package the deal, and we both make money. The way I do it is, I tell you exactly how to talk to them, how to prepare an email, and you send the email, hi, dear sir, madam, I have this property located this, and there are key bullet points you want to give them. There is a little video that I tell you to do. I show you how to do it, load it on a YouTube channel, and then you send them that link. So all we need is one tenant to call you back, and when that tenant contacts you, they usually contact you by email, and they say, we're interested to talk further about this location and discuss the details of the lease that you're offering us. That's when you actually forward it to me. We set up a Zoom call and we go, you, the tenant representative, me, and we discuss the details and you listen and you learn from me how I negotiate the 10-year to 15-year lease, the increases for 3%, how we're gonna give them the actual space, but we want the corporate guarantee that it's a triple net lease. And you will also hear me sometimes offering them, we're gonna give you $100,000 to actually do some tenant improvement to the location. We'll give you a couple months free rent. So I am willing to pay for all that. And once they say, okay, and they sign the letter of intent that they intend to lease the space, it is so powerful because now we have the deal under contract at 600,000. It is now valued at $1.6 million. You get paid on that upside difference, 10%. That means You put maybe only $5,000 as earnest money deposit to make the deal sit in escrow under your control and assign it to me. So your 5,000 that you put into escrow is actually refundable. If for 45 days you don't find the right tenant, you don't have to buy. You just walk away, cancel the lease. You have 45 days by law to 60 days, whatever you've negotiated, and you can walk away with no downside, with no risk. Your money comes back to you. But if and when the deal is lined up with the tenant and I negotiate all the details, that's how we make the big money. You will see on YouTube, this guy did 188,000 assignment fee. I have another guy, 40,000, 36,000, 80,000. The deal here, the 10% from 600,000 actual contract price to the 1,600,000, which is whatever we negotiated as the yearly lease times 16. Very easy formula. Even if I have to give them tenant improvement, all this, that's not your problem. What you negotiated as contract price to what the value becomes 16 times more than the rent is actually what you get paid, which is $1 million here. So you get paid $100,000, 10% of the upside. So the first deal, you can assign it. Second deal, you have the experience, you have some money, you can go repeat the process, find another building, but now for you and your family, put it under contract. I still give you, you have the tenant list, I still give you access, we work with you, we even negotiate the deal for you. And that's how we've had so many people succeed in this, whether they assigned it to me and got paid a lot of money, or they did it for themselves and made it happen. So some people, by the way, get trained with us and then they say, okay, I'm not gonna assign it to you, Cherif, I like the idea, because then they buy it. When they put it under contract for 600, line up the tenant, and I help them negotiate the deal, they just go to the bank and they tell the bank, I have the contract for 600 on a vacant property and I have this tenant who signed a letter of intent with a corporate guarantee. And then the bank can give you the loan and you end up with a great, great property, because to be wealthy, you actually can look at a chart like this. You have the deal under contract at 600K. You lined up a tenant and then you're gonna buy it. The property jumps in value to $1,600,000. And guess what happens? The rent keeps increasing 3% per year, every year. So the 100,000, 3 times 9 years since the first year is the 100,000, and then 103, 106, etc. Keep going up. At the end, it's like 127,000 that they're paying per year. And guess what? So 9.5 years into it, they will call you 6 months before the lease expires and they're going to say, we want to renew for another 10 years. Or they're going to say, we're not going to be renewing. So you have 6 months to call another tenant and tell them, I have Subway has been operating here. I'd like to give you the lease. I'd like to do this and that. And actually now you can increase the lease to, let's say, 135,000 to start. And then another 3%, 3%. All while the debt that the bank gave you, the bank will give you, will ask you for 20% down. So you'll have to put 120,000 down. You're going to have a $480,000 loan. The debt keeps getting paid down. You can even put the tenant and refinance and cash out some money because the value is so high. So that's how you become wealthy in the United States. That's how I changed my own future. I worked as a hotel manager, and then I started working for a very wealthy guy that I saw how he made the money. And I went out there, started putting the pieces together, and then I decided to train people. And for 25 years, we've been training people. We have over 1,000 video success story. We have 3,000 videos talking about other things, but this is the shortcut to wealth with the no downside, huge upside. So, okay, I'll take some questions.
Please use the Q&A for your questions. Cherif, I'm going to ask you this question while we're waiting for others to join.
Sure.
For those who may be new to this space, excuse me, what exactly is the single tenant or standalone buildings and why these are attractive to the investors?
Okay, single tenant building is a building that takes only one tenant. Single tenant, like a Jack in the Box, a Starbucks, Chick-fil-A's. They're just standalone buildings. You find them all over the place. And the strategy works because when you bring that tenant, these are national companies that are all over the place, and they actually are mostly publicly traded. So they have huge financial bases. Their corporate guarantee is worth $1 billion, $800 million, etc. Those are the type of tenants we're looking for these buildings.
Great. So Dheeraj asked, do you focus only on commercial properties?
Oh, yeah. I mean, residential, you have to buy it and fix it and sell it, or you find it below market because a distressed seller. So you have to find somebody who is going through divorce, or he's dying, or he's losing his house because he lost his job, something distressed. I'm not into that. I don't like to take advantage of these situations. Here, we're not looking for a distressed seller. These are listed with brokers. I don't even negotiate much. Even if I gave them the 700,000 they wanted, I'm going to still make a lot of money, because in commercial, you make a good deal by adding value. In residential, you have to find a good deal and then find the distressed sale and negotiate it lower, put it under contract title, sell it to somebody else who's trying to negotiate, trying to bypass you. Commercial is a lot more powerful. And I am, by the way, the largest owner of historic properties in the United States. You can actually look up my portfolio, CREPR.com. CREPR.com. It's commercial real estate Puerto Rico. I chose Puerto Rico because the cruise ship arrived there. It's part of the United States. And I started buying buildings, like just putting them under contract, bringing the big tenants. And upstairs, I did residential and all this. And then the cruise ship traffic coming was plenty of traffic for the tenants to make money. So I'm just telling you, I've done residential and commercial. There's no comparison, but that's my preference. You can make money with anything, but you can make a lot more money in less time with this.
So since you're talking about the comparison, and a lot of us come from a multifamily background, so can you explain how that wealth building, or I would say this potential strategy, compares to multifamily or the other asset classes in the industry?
Yes. So here we only buy the building, or we only transact on the building if all the pieces are together. So we get it under contract vacant, put it under contract, contact tenants. As soon as we have a tenant interested, that's when we buy it, or we assign it, or we do whatever. In an apartment building, you have to put it under contract, you have to buy it, so then you can access it and evict some tenants, or increase the rent, or rehab the buildings, etc. Here, I don't even do the rehab. I just give them a what's called tenant improvement. They do the work. The tenants do the work. The tenant signed for 10 years. In residential, I remember I had a tenant signing for 2 years instead of 1 year at a time. And when they signed for 2 years, I was all excited, because it was an 8-unit apartment building long time ago. And guess what? 7 months into it, he called me and he said, my job is relocating me. I need to get out, and please have a heart and all this. I have a family. And I had to work it out with the guy, refund him the deposit, get him out. It's vacant for a month, and I had to pay commission to somebody to put. There's no comparison in terms of the so much hard work for residential versus this, where you put the pieces together. And even if you didn't do the first deal, you learn more, you build rapport with the tenants that you talk to, etc. And then the next deal in the same area, or a little bit expanding your area of focus, you'll make the second deal. One deal can change your life. The upsides, 300, 400, 500,000, $1 million. I've done a deal where I put under contract for $5,000, and I got Puma Corporation. Puma is the competition of Adidas. And when they leased at $20,000 a month. The deal was under contract, $1.5 million. The property went up in value to $4 million. It was mind-boggling. This was in 2006, by the way. I mean, I've done some deals that's how I ended up with a big portfolio. I didn't save my money. I didn't try to buy residential and try to sell them one at a time, or wait till the money increases. I get excited about my formulas because I know they work.
Okay, so the next question is from Val. He's asking, is this applicable for Canadian property? Will you give POF?
Absolutely. We work with Canadians. We've trained few Canadians. Actually, the opportunities in Canada are amazing because there's so much less competition. I was in Toronto about a year ago. You could see downstairs on a big building. It's a big building. On one side, McDonald's, and on the other corner, vacant space. I mean, it's screaming Burger King. It's screaming, Chick-fil-A, and nobody was doing it because, I don't know, there is less training in Canada or what's going on. But yes, we do work with Canadians. Canada has less competition, so you can make a lot of money there. We do help you also when you do it. If you want to assign it, you don't have to assign it to us. You can assign it to people in Canada where you advertise it, and you simply say, property under contract at 600. The value right now is, let's say, 1,400,000. Very interested in partnering or assigning to an investor. You will see how many investors will come out of the woodwork and will come and work with you. So yes, many ways to make it happen.
So Dheeraj has another question. He says, how easy is it to find the properties for someone who is new to real estate?
Finding the properties is easy. Lining up the tenant, putting the whole package requires a lot of work and follow-up. Even the reason I created a training where I train students and I tell them, I'm going to show you the secret formula and how you do it, and you do it with me, because when I call brokers, like I could have done with brokers, right? The brokers tell me, oh, I just want to list the property. Oh, I just want to represent you when you buy it, make my 2.5%, 3%. So I realized that they are in that little problem of needing the commission to put food on the table. So I need people that have the tenacity to look around when you drive, how easy it is to find a property. Go right now to loopnet.com and put single tenant and you see how many sitting vacant, because very few people know how to do this. Actually, I wrote a book called Blue Ocean Opportunities in Commercial Real Estate. Became a bestseller. Because Blue Ocean, there's no competition. Everybody's training people on buy a home, fix it, sell it, buy multi-unit and kick people out and then get this and refinance. It's too many moving parts. This is just one step. And if you buy it and keep it, you're going to get paid for 10 years. And if you want to know if I'm walking the talk and talking the walk, look at my portfolio and you be the judge. I have a real estate fund that has 100 million in assets in it. Look me up. So, by the way, if I may interject, those who want to do this, I want to, because sometimes I get so excited I forget. Can I say who they can contact?
Yes, of course.
I want you to contact Ashley. Ashley is my vice president. She's been with me 20 years. We've been in the education business for 25 years. We've been doing this for a bunch of years now. So call Ashley. I'll give you a phone number, 844-720-1031. So 844-720-1031. Or you can email her if the line is busy, Ashley, ASHLEE, at cmrei.com. CMREI is Cherif Medawar, realestateinvesting.com. So,
and you also mentioned, Cherif, that you have a special deal for all the people over here, and we have a special link for them. So we're gonna go use that link. If you can mention that, please, because you have something special for all the audience today.
Yeah, so it's usually $10,000. You could see it anywhere. You could see coaching people do for 40,000, 50,000. We usually do it for 10,000. For Vinky, I know Vinky, you and Ashley talked and you said, I want something special for our people. So we're doing it for $5,997. For that $6,000, you're gonna get trained by me. And I'm gonna tell you, the training is November 1st. And you can come to Los Angeles. I'm in my house here in LA right now. As a matter of fact, here I am standing here in my home in LA. You'll train at this table here. I'll have people, okay? And we usually have a training with like just 5-6 people, because I don't do this like all over the place. I just do in specific areas. We train individuals so I can work with them, and you'll have direct access to me. So talk to her today. You do a live training with me. You will either fly into LA and be here, or drive, I don't know where you are. Or if you can't come, you will be attending on Zoom, and then the people in the room, and periodically I take the Zoom call, so you're interacting with me live, and I break it down for you through the day. This is a whole day training, how to find the property, how to talk to the broker, how to send the proof of fund, how to actually do the video and what the package you prepare for the tenant, and then how to talk to the tenant, and then how we get on the call and you'll understand how I negotiate the deal and how you get paid. Or if you're going to keep it for yourself, how are you going to keep it for yourself? Sorry, got too excited. Ask me some more questions.
That's good. We love that excitement. That's keep us going. I love that. So the next question is from Teresa. What is the minimum market size for QSR to work? I have a lead on a vacant property in a town with 2,500 population. There's already a Burger King in the town.
Outstanding. The question I always tell people, do people eat there? If they eat there, probably in a small town, the property will be maybe $200,000. We had a deal, $200,000 in North Dallas, a small little town. And this guy said, I went to visit my sister because she moved there, and there's this vacant building. They want $200,000. What do you think? I said, do they eat there? He said, yes. It is a whole national list of tenants. Call them. because their lease is going to be lower. Their lease is not going to be 8,300 a month or 63. Their lease maybe 4,000 a month. But guess what? The property is going to jump from 200,000 to 500,000. So you have 300,000 increase. You're going to make 30,000 assignment fee. The community will love you. You will make money. My real estate fund will make money, and I'll make what the assignment fee I make the same. The rest is for my investors in my real estate fund. So that's how we do it.
Great. That's pretty awesome. So I wanted to remind everybody, please use the Q&A if you have more questions. And by the time they're coming up with questions, Cherif, I'm going to ask you one personal question. And I think I have something in my area too that I've been watching for days. And it perfectly fits your criteria, whatever you're telling us. And but the question is, I do not know if the property is on sale or no, or how do I contact to figure out if this is on sale, somebody's trying to sell, or they're looking for a tenant, or how would you go? I mean,
to find the owner.
there. Yeah, from your experience.
Yes. Sometimes by just plugging the address online, you're going to see that it was listed long time ago and there is somebody to contact. Or you're going to see that there was a transaction with it, that somebody bought it recently or something like this, because now the internet is amazing. And with AI, you can find the owners a lot easier. But in many cities in the United States, when you put an address, it can take you to the city, the county, and then you can click. And sometimes it just tells you it's under this limited liability company. They receive taxes in this area. If not, you can always go through the tax record in the county, which is now mostly online, and you can plug in the address. It tells you who receives the tax bill for that property at what address. So maybe it's a PO box or something, and you can just send a little letter to that address and say, I'm very interested in your property, please call me. They will call you even out of curiosity to know what you want. And there is another way is to also, you could call a real estate agent or broker and tell them, hey, I'd like to make an offer on this property. Do you want to represent me? And then they could actually dig who the owner is, because they can go to the public record, can talk to a title company because they have that service on their license. And they can actually call the owner and say, I have a buyer. Are you interested in selling? It doesn't hurt us at all, because the commission will be paid by the seller. And we will know if we have an upside or not based on the numbers. And that's what I train people on. You have to understand the numbers. What if they're asking for this building $1 million, but actually we don't want to offer more than 600? Then we pass. We say, thank you very much. It does happen every now and then. And maybe we missed something. So I take another look and say, you know what? Maybe we forgot that this area is booming and that's why they want more. Let's offer more. So we work the numbers. It's part of what I train people on, because almost every business comes down to, do the numbers make sense? And what can I do to add value?
Yeah, you said it very nicely. Number makes sense, because numbers, if you understand the numbers, you kind of read through the matrix. That's the way I look at it. So there's another question from Stephen Lee. He's asking, how do you find them, or how do they find you? It sounds a bit like wholesaling for commercial real estate wrapped into triple net burrito. I like that.
Oh, it's exactly wholesaling commercial real estate. Mm-hmm. Unlike wholesaling residential, where you just get a property under a contract because it needs rehab and all this, so the property maybe is worth 300,000, but it's such bad shape, needs 50,000, and the person want to sell and not gonna pay commission, so you get it under contract at 200 to assign it for 10,000 bucks. That's actually the average assignment fee if somebody's successful in wholesaling residential. Here, you're getting not from desperate people. You don't even have to worry about desperate people. There are thousands of these in every community. You just get it under contract and you put the pieces together. You call the national tenants, you get the video, you send to them, etc., and then you wholesale it to me. I am the buyer because I have a fund. I have other people's problem. I have more money than I have time to find deals. And that's how I do in each city, so many people that do this. The problem I have is they do the first deal, and then the second deal, they do it by themselves because they assign one and the rest they do for themselves, obviously. But yeah, it's wholesaling commercial.
Yeah, well, that's awesome, right? Because once you learn the tricks, so you can either stay with you. And I'm pretty sure, once they do it once, they get so comfortable, they can do it on their own. If they don't have the comfort level, they can still go with you, second deal, third deal, until they just ace it for themselves, and then they can go on their own.
Exactly. There are many ways to do it. I just gave a simple way. Do you know, you can put it under contract, line up the tenant, and then you don't want to assign it to me, you can call a hard money lender. These are people that will loan you at 12%. It doesn't matter because you're going to get the loan, put the property in your name, and then go, when the tenant comes in, you can then refinance with a regular lender. Do you know that even if you're bankrupt and you line up that tenant, you can still get a hard money loan and put the pieces together? Why? Because, and then go refinance with a bank? Because the bank is going to say, I don't need your credit. I need you to assign the corporate guarantee to me. That means you will assign the lease to the bank. There is so much more I will train people on. Actually, I'll give you even another one. You put it under contract, the tenant is willing to pay $8,300, and then what you actually can do, you can call the seller and say, listen, I know I have it under contract to buy it. Do you mind if I pay you a lease for, let's say, 6 months? I'll pay you a lease for $6,000 a month. And then let me exercise my option to buy it in 6 months. So it becomes a lease with an option to buy. In the commercial leases, you have the right to sublease. So you lease from the owner of the building at $6,000, but you're subleasing to Subway. So Subway comes in, and then they're paying you 83, so you're making 83, but you're paying 6, so you make 2,300 a month. And then now that you're making that income, you can go to the bank and say, I have a lease, I'm paying 6, and I have a sublease, and the bank is going to say, I'll give you a loan, don't pay the lease, pay us, exercise your option to buy. So you can make money on a spread without even buying the building. There's a lot to do when you understand how to do this. And by the way, I want to tell you something, I'm not bragging, but I dare you to find somebody in my caliber, with my net worth, with my experience, that will do personal training for people. Usually it's assigned to somebody who's a coach on the phone or whatever. You come and meet me in person, you're on YouTube, you're on Zoom with me when I'm actually doing the training. And why? Because this benefits my fund, my real estate fund, where people invest with me. It benefits me, my family. I have my kids into this. My son, he's 18. He drives, he finds the deals. And he takes the pictures and he tells me, and he puts it on the car and he puts the pieces together. So if an 18-year-old can do it, I know you can.
Wow. Please show some love to Cherif. He's sharing like golden nuggets. Oh my God, his energy. This is pretty awesome. So once again, wanted to remind you, please put your questions in the Q&A. So another question, we're going to move on to Cherif. Someone like me, this question is from Wilson. Someone like me that needs $200 million, how much will I pay back? I'm not sure if I understand the question.
Let me make sure I understand the question.
Someone like me that needs $200 million, how will I pay back? That's what the question is asking twice.
Okay, so if he needs $200 million, the question is, how many deals can you make? By the way, even $1 billion is not a crazy goal. It's only crazy if you give yourself a very short period of time to make the goals happen. So when people say, I want to make 200 million, well, maybe you're 25 years old and you're going to live to be 95. So you know the power of compounding? You know how quickly you can make it? Do you know that if you make 8%, just 8% per year, in literally 9 years, you double your money? It's like making 12% annual rate of return. And then in another 9 years, you're like making 20% annual rate of return. That's how the power of compounding works. So you want 200 million? Every deal can make you $500,000 to $1 million. How many deals can you do? 1 a quarter? You want to work harder? You want to focus on this? So the question is, this is a strategy. And as you make this bigger, maybe you can do a shopping mall. Maybe you can do a strip mall. The beauty about real estate, you can actually keep doing one deal at a time, but it's a bigger deal. Like now, I do hotels. Like with my extra money, I just buy hotels. Why? Because when I buy them, there's a whole team. So I don't have to deal with the day-to-day. And I can focus on my fund and working with people, teaching people, because it's a great service for many communities and I grow a lot faster. Cool. Hopefully I answered this question.
Yeah, no, you did. Thank you so much. And just wanted to remind everybody, I wanted to ask you this question too, Cherif. When is the next training is going to start? And I'm going to put the link in the chat. Please use that link to avail today's prize. And also, Ashley Joan is the contact person. Ashley, if you can add your contact information one more time so that everybody knows. And Cherif, if you can tell us when the next training is going to start, the actual training.
Yeah, so the actual training is going to be November 1st. But I want you to know when they sign up, let's say they contact Ashley today and right now, And they start. I'm gonna put Ashley's email just in case. I think she's on the phone. Actually, I think somebody may be
Let
calling.
me put it here. I have it here. Hold on.
Here I'm putting it. So what I'm saying is, when you enroll, let's say you enroll today, make it happen. We're going to give you access immediately to the website that has video presentations, that has the word definitions, because I assume people don't know anything. I like to start like, you don't know anything. You've never done this before. I define the words. I go through the business concept. I go through the business model, 1, 2, 3, 4, and then I go through the actions you're going to take for success. It is the most detailed training step by step. And we have it already on the back of the house, which is on the website. When you enroll, you'll get access. You'll see what other people have done. You will see success stories. You will hear conversations with tenants, how we do it. This is not something like I fantasized this morning. This is something I've been doing for years. It changed my life. I was a hotel manager. I was making good money, good benefits, but I was working around the clock, doing nothing, like not even building a wall. I just go, come back, go, come. And then I said, wait. I got to do real estate and I got to do the commercial. So I work once and get paid for a long, long time. So that's how it's done.
Great. One time again, I wanted to remind everyone, if you have any questions, please use the Q&A box and ask your question, or even you can put in chat too. I can get to it. So next question is from Wilson. It's the same question. You have answered that already. And Herbert is asking about repeating Ashley's information. We did that as well. And any more question, please use the Q&A right now. This is your time to ask Cherif anything, and he will answer live. So let me see, Cherif. I think you mentioned to contact somebody regarding the property that I have in mind. And like I'm saying, you were saying you should look for gas station, Burger King, Chick-fil-A, whatever the neighborhood. And also you mentioned, the car count, how busy the street is. And that's like really, really busy street this is on. And this used to be I think, I don't even remember what it used to be. It's like a convenience kind of store, like a big thing. So I'm going to look into that and then see how I can go about that. Definitely wanted to reach out to you for that, to learn more from you,
Absolutely. And I talked about single tenant buildings with drive-through. What if it doesn't have drive-through? It's okay. We just recently did a deal where the student, we call them joint venture partners, put the deal under contract and we leased it to these emergency medical clinics. They have, I don't know, like hundreds of them around the country. So they don't need a drive-through. They just said, so people come in and they get their vaccines and they get like any emergency help and they don't feel well, they're vomiting, whatever. So they leased the space. They leased it for 15 years. The property value went through the roof and the person got an assignment fee, $86,000. So it all depends on how they want to look in their own backyard. It's not difficult to find this. You can go online to find them. You can drive in your neighborhood and look. Like you just said, I saw this property and I started looking at it. That's how actually I found many of the good deals.
Yeah, that's right. I think many of us, many of the investors, they think like, I'm not sure if this is the right deal or just for the big players only because, sometimes you do not have that deep pockets.
Yes.
And then people think, oh, if you have the money, that's the only way you can do it. But, these are, I think, one of the barriers to entry. But are there any common barriers to entry in this place, or like the way you're saying it sounds very simple, sweet, and doable strategy?
Many barriers to entry. Why? Number one, they don't know exactly the criteria needed for the right property. Number one, there are 15 criteria. I gave you 3. Number two, they don't have proof of funds to have the broker take them seriously, because the broker want to know, you have the money or you're wasting my time. This is not residential. This is commercial. I need to know how you're going to buy it. That's number 2. Number 3, they don't know what's the right price to offer. There is a formula for it. Number 4, it's overwhelming to find out which tenants will fit where and how do I reach them. Number 5, how do I talk to the tenants? What do I tell them? What email should I send them? What should be in that email to attract them? And then number 6, and most important one, is when the tenant says, I'm interested, how do you negotiate the letter of intent? That's what they do for a living versus us who are new and the people that are just like, oh, I've never done this. It's like me trying to buy an airplane. I don't even know what to look for an airplane. I just fly in an airplane. It's like you just go in and have a sandwich at Chick-fil-A. You don't know how to negotiate a lease with them that can transform your life. And
Mm-hmm.
once you know how to put the pieces together, you can attract partners, you can attract people. You can,
Uh-huh.
like, people create a real estate fund where they tell people, invest with me and I can do it. So yeah, there are half a dozen, if not more, barriers to entry, which makes it even better for us because there's less competition. And listen to this, the owner of that building, usually they don't know how to bring the national tenants. There's no training for it, except if they come to me. But then they call a broker and they say, can you find me a tenant? And what's better for the broker? To go
Mm-hmm.
call tenants and bring them and tour them and all this, or to just put a for sale sign and have somebody come and buy. So they convince the owner of the building, listen, let me just put a sign, and if we have somebody coming to rent it, it's good. If not, we just, but they don't make the effort to call because they prefer to make efforts to go list another property. So their focus is on something else completely. I'm telling you, I have done this for years and I've had very little competition. I've trained people. They do 1-2 deals for themselves. They do a couple to assign to me and then they're set free. It's complete difference than any other strategy I've seen.
So let me ask you a follow-up question. In single tenant retail, the tenant is only one, and basically that tenant is everything for us, right? Because
Yes.
there's only one rental income that we're getting. So what are the most important factors to look for when you are evaluating or vetting the tenant, their strengths,
Exactly.
well, is there going to be any backup plan or stability perspective? What are your thoughts on that?
That's why I give you the list of the national tenants we deal with. And those are thousands. Why? Number one, we need them publicly traded. I give you an example. Puma Corporation. Puma Corporation was leasing from me. After a couple of years, they said they had to leave because they have a problem with the mall and my location, they had to pay from the gross sales to the mall, etc. To cancel the lease, that was $20,000 a month. They paid me $1,057,000 to cancel the lease. They have to buy the lease out. Otherwise, I can go after that publicly traded company. And I will win because I have a contractual lease that's enforceable in the United States, in Canada, even in Mexico, it's enforceable. So, and why? Because the contract's a legal contract with a nationally traded company, publicly traded, and that's the beauty. I've had people tell me they put a tenant, the tenant wanted to leave early, they wanted to go to a bigger space, they were doing well, they had to buy the lease. There was like 700,000 left on the lease, and they had to pay the owner of the building, and the owner paid off the building. And they said, okay, I'm gonna get a new tenant, and it's free and clear building. So the downside is an upside.
Great. So there's another question from Raj. He's asking, great. Is this only for single tenant? How about multi-tenant properties?
If you're doing this deal with me, you do not do multi-tenants, you do single tenant. And I'll tell you why. In a multi-tenant, when it's a strip mall, we have to then do the due diligence. We have to check the floor. We have to check the air conditioning. We have to check the walls. We have to check the common areas. In a single tenant, we do nothing. You just put it under contract, you start smiling and dialing. Who does the inspection? The tenant, when they come, they sign the LOI, they come to do the visual inspection, and they do the actual inspect. And that's why I tell you, sometimes they ask me, we got to change this, I'm going to put in a bigger kitchen, whatever, and we need 50,000. And I give them that 50. I give them 100. I don't care. Why? Because the value of the building is going to go up so much more with that big tenant with the corporate guarantee coming in. If you listen and review, and I'm glad you're recording this, Vinky, because if they listen exactly to how much I covered in my story of how to put the deal together, they will see the nuances of the details of what make this one of the best and fastest way to become wealthy in the United States, in Canada. In Mexico, I trained somebody and they got a space that they inherited from their parents, and all they did was they just started smiling and dialing, and they got a tire company. I don't want to say the name of the company, they're in Cancun, and the property went up $700 higher. I mean, literally, they're sitting home. They're enjoying their life now with the cash flow and the value of the property. He said, I'm not going to sell it. I'm making great cash flow. And he studied to be an architect. So he just does architectural stuff part-time. But he understood this works anywhere. In Malaysia, I had a lady inherited a building from her dad in Chinatown in Malaysia. And she got 7-Eleven to lease from her. She was going to sell the building from nothing. I said, I can buy in Malaysia. I don't know outside of the United States. I just focus on the US and US territory. I said, but follow the training. She took the training. She wasn't going to do any deals in the US. She just wanted to know what to do with that building she inherited in Chinatown in Malaysia. And she ended up contacting 7-Eleven and they came leased. This is incredible.
So this is all because it's a triple net lease, right? That's what you call it, the corporate lease. But how about the multi-tenant? We can still, this triple net is still applicable in that as well, right?
Of course. But I'm saying if you want to take the training to understand how to do it, to work with me, to assign to me, you can actually make it the easiest way possible for you, which is single tenant. Once you know how it's done on a single tenant, I've had many students. I've had actually older people that were in the business and they were doing like storage facilities, etc. And they went on and just did this, but they got strip mall. So they get a strip mall with 6 locations. 2 of them are vacant. So they bring the big tenants and then they change these tenants. When they leave, they go and bring bigger tenants and their strip mall goes up in value. So yes, you can do it on multiple. You can do it with a shopping mall. It depends how big you want to do. But start small and then think big. And this is impactful because you don't have a downside. You don't have to buy, you don't have anything to inspect. Cool.
Great, that's pretty awesome. And one time again, I wanted to remind everybody, please use the Q&A if you have any questions. And I also put the link in the chat. Go to gobeyondmultifamily.com/JV-program. That's where you can sign up and get the special deal with Cherif today. So Cherif, one last question I wanted to ask you, and if there's any other from anybody from the audience, I'll ask you that as well. So my question is, I think retail has gone through big shifts, right? With the e-commerce, with all this changing market sentiment, the consumer behavior, even the pandemic. So what trends do you see driving the future of standalone retail, and how should investors position themselves?
Okay, so the best way to answer what's going to change in the future and trends, let's see what has not changed. Okay, during COVID, and you can Google this and see it for yourself, the only type of real estate that continued without a hiccup were the QSR, quick service restaurants, that are single tenant buildings. They laid off the staff, they kept the kitchen crew, they did what's called a ghost kitchen, and they started delivering food because people wanted to eat the stuff they like from the fast food and the salads, etc. And they continued paying their rent and they continued to grow. And the bonanza, the growth started happening 2021, 22, 23, 24. And it's been unbelievable because now everybody realizes that people will need to eat, no matter if there is a pandemic, there is war, there is peace, there is high interest rate, low interest rate. As a matter of fact, if the economy gets tough, people don't go to a full service restaurant to sit. They come out from their offices and they go to these quick service restaurants in the single tenant buildings. Extremely powerful. So what do I see in the future? An evergreen way to grow. We see that the actual location itself is smaller square footage with double drive-through. You can actually Google right now, new Burger King single tenant buildings, and you'll see they have just like 1,200 square feet for just the kitchen and couple tables inside, couple tables outside, and then double drive-through, even triple drive-through. So I train people on what we're doing, but if you just get any good single tenant building, it is a single tenant because it's good traffic. And you see them next to each other because they feed off each other. And that's why we have kind of an opportunity to attract them instead of pursuing them, these big tenants.
Once again, I wanted to remind everyone, if there's any questions, please use the Q&A or the chat. And any last words from you, Cherif?
Yes, I want people to know that if they enroll today or tomorrow or something, you immediately get access to the information and you immediately get access directly to me. So if you get a deal under contract by Friday and you want to start talking, you will already have all the steps you need to do. And moreover, one final thing, you can count on this. You will never see that discount offered again by me. We do it $10,000 all day long. Even you will see when I do the podcast with Vinky, it's going to be at $10,000. That's how we do it because my time is very valuable and I want to work with serious people. All the best to all your database. You have been wonderful. Thank you, Venki. Thank you for the
Thank you,
opportunity.
Sharif. Thank you so much again. We really enjoyed this. And everyone, you know how to reach out to me if you have any further questions. You can send me email at binky@loombainvest.com. And everybody, thanks again for being here. Until next time, keep building, keep growing, and keep aligning your wealth with your purpose. Bye for now. Thanks again, Sharif.
Thank you. Bye-bye. Bye.